Hey, good morning, everybody. Wanted to look at Roundhill Investments. They are another high income based fund manager, very popular for their XDTE, QDTE, and RDTE funds. XDTE is the S&P 500 based one. QDTE is the NASDAQ 100. And then RDTE is the Russell 2000. So let's look at their most recent distribution. Thought this was also pretty cool. They recently just passed $3 billion of assets under management. So congratulations to them. Scrolling down a little bit here so we can see, we'll make this a little bit bigger. So here are some of the numbers here. So Roundhill's S&P 500 zero DTE covered call strategy ETF. Looks like they're distributing 0.45%. I think that's probably annualized. So what is, 0.45 times 52? Now, I think that's what that number is. So a 23% yield, a 28% yield, and then potentially 32% yield. If I'm wrong on that, someone let me know. I'm kind of curious. But here are the numbers. So for XDTE, every one share you have of this fund, you're going to get paid 23 cents in distributions. The ex-dividend date is today, December 5th, and then they're going to be paid on Friday. So they are weekly pairs. So if you're looking for a fund that pays weekly, this could be one you look at. The next one is the NASDAQ 100 based QDTE. 23 cents. Same thing, ex-dividend date today, and it's going to be paid out tomorrow. And then lastly, RDTE. This is one I'm interested in looking at. Currently looks like it's paying roughly 30% a year, and they're going to be paying 28 cents this Friday as well. Ex-dividend date on Thursday and payment date Friday. So Roundhill is a little different. They sell zero DTE options. Let's just look at, I guess, XDTE here. So let's look at this. So the XDTE fund overview is saying that it's the first ETF to utilize 0 days to expiry, zero DTE options on the S&P 500. XDTE seeks to provide overnight exposure to the S&P 500 and generate income each morning by selling out of the money zero DTE calls on the index. XDTE is an actively managed ETF. So one might wonder why invest into XDTE. They have weekly distributions. There's the income potential, and looks like they're harnessing volatility. Okay. Scrolling down a little bit, assets under management, 253 million. Okay, we haven't seen a full year of this fund yet. It came out in March of this year. So here are some of their holdings. It looks like their biggest holding on this list is an SPX call for, okay, so this is old data, actually. I apologize. Actually, no, this is 2025. So this is September 19th, 2025. They have a 540 call, 540.5 call. Then June 20th, they have a 520 call. Then March 21st, they have a 420 call. And then SPX, December 19th, that one's coming up pretty soon. They have a $607 call. So I'm not really sure about these prices. It's almost like they're selling SPY, but I was thinking they were focused on X-based or SPX-based. Let's see if we can view all. Yeah, so it looks like they're all SPX. That's kind of surprising. But needless to say, then they have some, they have some treasury bills thrown in here as well. It looks like 8%. And then they have another December 19th call at the 607. Okay. So majority of their money is further dated. You got the 540, 520, 420, and so forth there. So those are some of the holdings. I'm not 100% sure as far as their strategy goes. Looks like they're selling out of the money. I was thinking it was 0 DTE, but it doesn't look like that's what's in the holdings here. Someone correct me if I'm wrong on that, but kind of curious. The performance. Yeah, so this isn't a great, let's see if we can pull up like total rate returns. And then, yeah, so this works. Let's pull this over. If we look up, what was it? XDTE. So year to date up 18.5%. Not terrible, honestly. Compared to SPY. And also, this isn't a full, disclaimer. This is since March. Okay, so they did update the data here. But this is through, here, let me zoom out so you guys can see. Yeah, so up 18.55% year to date versus 25%. So it's pretty close to SPY. And it's not a full year either, just starting in March. One that I kind of want to look at is RDTE versus IWM. This is one I've kind of been looking at, starting to position in. Once again, pretty new fund as well. It's just since September. But you can see here that RDTE since September 10th is up 15.83% versus 17.38% of IWM. So time will tell to see how big of a difference these two funds will be. But yeah, so that's kind of that there. RDTE, and then the last one I guess is we can look at QQQ versus QDTE. A lot of people don't like to compare the underlying with these high income funds, and that's fine. It makes sense. They're different instruments, so they're obviously one's going to perform better than the other one. But I just kind of like seeing it here on the chart. So since March 7th of this year, QDTE has returned a total return of 17.85%, and compared to the NASDAQ of 24.41. And let's look at QDTE just from a price return year to date. It's actually decreased a little bit here since March of this year, down 6%, 6.4%. XDTE has done, what has XDTE done? XDTE is in the green since March of this year from a price return. So saying that you didn't drip your dividends, it's been able to hold its NAV and go up a little bit. That's important. And then RDTE since September hasn't really been around too much. September 10th, it has held its NAV pretty nicely, up 8%. You could have taken the dividends and lived on the dividends, and then your investment still would be up 8%. So that's pretty interesting to see there, and that's something that I really like to analyze. I don't want to always have to, like, if I want income, right? Like what's the point of investing in high income ETFs if you can't live off the income, or if you can't use that income for something else? So something like, I know this fund has been getting a lot of heat lately, but TSLY, year to date, it's down 37.52%. So if you didn't drip the dividends, you invested, $2,300 to start the end of the year. If you didn't drip, you're down to $1,497. Yeah, you've collected dividends, but your investment is down. So I want something that's at least going to hold its NAV without me dripping its dividends if possible. And then obviously if it could go up, that's why I've been looking more at obviously the Roundhill funds. It looks like their yields are a little bit smaller, so that's probably an indication of why they can hold their NAV a little bit easier. But then also the curve ETFs are something that I'm going to start looking at more into as well. For example, look at Goop. Sounds like I'm saying poop, but since January of this year, it's appreciated 7.8% just from a price return. Another one, NFLP. It's appreciated 35% just from a price return. So these are some other funds that I'm kind of going to start pivoting towards more. I definitely want my NAV to be able to hold steady or increase a little bit there. So those are some things I'm looking at. But yeah, guys, let me know your thoughts down below. Do you like the Roundhill funds? Do you like the these curve ETF funds, smaller yielding, but they're able to hold their NAV a little bit more. They're selling probably further out of the money and focusing less on income and more on capital appreciation there.